Well, welcome everybody. Before we get started, yeah, good to see you on a Sunday. Richard was pleasantly surprised to say, I'm going to have a half a dozen people here on a Sunday because everybody's watching football or going to church. So, hey, I just wanted to get with you on, if you don't have this QR code, this is going to be a link tree. It has all the links to both this presentation. I'll be posting this video so you can go back to it. Also, a lot of resources that we have all in one place, so you can either just scan that and you can have a lot of resources about this presentation and stuff, or you can also go to texasmastermind.com and that'll bring you to the links. I'm going to keep updating those links as I get more content and collateral for you guys. All right, this is going to be fun today. Who came to any of the last two presentations? Okay, just one. All right. So how many have seen my presentation before? Okay, all right. Well, this is going to change things a little bit on how I'm going to present. Yes, okay. So the last two, on Friday night I did what I call elementary school in real estate and high school for real estate investing. Yesterday we did a little more deep dive. We went into more college, and now we're doing some university stuff. But since there was less people that haven't seen my presentation, I'm not going to do the entire presentation I did on Friday night because I've already got it recorded. And when I send you an email, I'm going to send you an email with all these resources. It's already there. It's all the contents there. Now, it's not updated for what happened in Austin recently because it was recorded for 2 years ago. But the concepts are still the same. It just happened that Austin just blew up in the last year thanks to a pandemic. So, anyways, only a few people have seen me speak before. So I will just get into it. Can you hear me okay? So I don't have to use this. So yeah, okay, that'd be because I've been fighting it all day. So if you can't, let me know and I'll use it. But I think we're going to be good. I talked loud enough. All right, let me go back in here. Okay, so my name's Ken Renner. I'm a real estate broker, a real estate investor. I've been involved in real estate since 1983. That's when I got my first license in Anchorage, Alaska. I was 19 years old. Got my broker's license there when I was 21, so I became the youngest broker in the state of Alaska. I grew up in California, though. Moved to Alaska for 5 years and then moved back to California. So I started in 1963. My dad moved from Southern California. Moved from Frankfurt, Germany, to Southern California, getting out of the military. And so he bought a house in San Mateo, just down the street here, for $17,000 using a VA loan. I'm going to run through some of these slides because I only have 100 slides here on my normal hour and a half presentation, so we're not going to go through 100 slides for you guys. But I'm going to do some highlights for you. You can always go to the links that I'm going to send you so that you can have, you can pause, rewind, fast forward through it. But so I started in 1963, bought a house for $17,000. I just looked on Zillow and the estimate of that is $1.7 million. So the bottom line was that's gone up 1,000%. Now Elon Musk just recently said, as you know, of course Elon, probably one of the smartest guys in the world. We know he's one of the richest, if not the richest guy in the world. He picked up and moved to Austin, and big advocate on Texas. I mean, I'm sorry the headquarters for Tesla's moving there, but you know, Oracle, they've all been moving there, and so that's really kind of what's going on. This is a mass migration of people, but not. And he said that Elon said that Austin is going to be the next biggest boom town the United States have seen in the past 50 years. So when he said that, that's when everything is, no, it's not just him. It was just a matter of fact that people kept on moving to Austin, Central Texas, and they're going to continue to move there and to find hopefully affordability, better lifestyle. And that's why I moved there so many years ago. I moved to Austin in 1993 from California. And I've lived there ever since. So I've been there for nearly 30 years. And so I've watched the whole town grow. I mean, I've seen it triple in size. So just quickly, that's our Austin skyline. This is my beautiful family. Michelle is my wife of 28 years, and I've got 3 beautiful kids. And I've been now 38 years in real estate and over $500 million in sales. I'm a top-selling broker in Texas, also a best-selling author. I've been on 3 episodes of HGTV's House Hunters, and I've created the HOPE cause, which is housing opportunities possible for everybody, is what HOPE stands for. Because my first really foray into helping people buy real estate was first-time homebuyers, because they needed the help, they didn't get the help. And I made a great living getting started with first-time home buyers. But then I found out those first-time home buyer homes, they'd be great investments. Starter home, 3-2, 1,700 square feet. You know, that when my wife asked me in 1995 when we were selling those back in Pflugerville, Texas, she goes, "How much is that house?" I said, $98,000. She goes, "How much will it rent for?" I said, "Well, Dell's blowing up right now, so it's $1,200. She goes, "What's wrong with this picture? Why aren't we buying it?" I said, "We're making everybody else all this money. You know, why aren't you buying it?" I said, "Okay, all right." We bought 2, and that's kind of how we do it. That's how we roll. So one of my agents we walked in and bought a couple houses up in Temple, and she looked at me and she goes, "You buy houses like people buy shoes," you know. So, and Richard Smith is our special guest here, and so although I've done $500 million in sales, I've done nothing compared to what he's done in his real estate career as far as building a massive portfolio of real estate, over 200. I asked him how many. He goes, "I lost count." But it's somewhere between 200 and 250. 200 single families, and then the rest is apartment, 50 doors in apartments. So I like to bring people, that's what I bring to the table, is relationships with people like Richard who are already there. I mean, you don't have to figure out, $600,000 a year in passive income. I mean, that's what you did it publicly yesterday, so I can say that, without having to work. But he's here today. Why? Because he's giving back. And that's kind of why I'm here. I'm here to share. I'm not here to sell anything. I'm here to get into a relationship, and I know we've been talking, and get into a relationship with, because I'm not going to give you any back of the room sales. I can't stand that. I was on the speaking circuit for many years, and I watched behind the scenes what that whole scene was like, and I didn't like it. It wasn't very integritous. So, but I have spoken on some pretty big stages. This is at Irvine Hyatt back in 2004. Same crowd, same group, pretty much the same presentation, just happened to go 40506 was our boom then. I sold 175 houses that year, mostly to investors like you, put me in number 2 in the Austin Business Journal. The one down below is me at Keller Williams conference, convention of 5,000 people there talking about teaching realtors how to market themselves through video. So I've got one of the really cool video channels, which is a resource for you. There's our team, so it's not just me. I've got a team behind me, and that's one of the things that a lot of brokerage agents, investor specialists don't have a whole team. I mean, there's 15,000 realtors in Austin, but there's very few that are specialists at what we do, and that's a thing that we have a network of help that took me years and years to build up. So there's the city in 2004 when I took this picture from the top of the Hyatt. There it was a couple of years ago when I got to the top of the Hyatt. I couldn't get up there to take more pictures because of COVID restricting me from that floor. But next to that is these are all the growth that's happened since that picture. And 10 miles north of here is what's called the Domain, and that's a new downtown, a second downtown they call that. And that has looks just like this, but it's got the home of Amazon, Facebook, Indeed. Facebook, Amazon, Indeed, and here's Apple. Well, Apple's just north of that. So, but the Northwest Corridor, so Google's downtown, Oracle's downtown, Tesla's to the east. We're going to kind of see some maps for you so you can kind of put this all in perspective. But it is a high-tech town, and it's coming with its share of problems. So this is after I took those pictures from the Hyatt. This is what the traffic looked like in the middle of the day. So we are struggling with the same problems you all are probably having, which is the growth. Capital, so we're the capital of Texas, so that means a large government presence, so government and high tech. It's a high tech hub of the South. We have good transportation in the suburbs. Those are these toll roads that go north and south and east and west across the north side, surrounding Austin. So outside of Austin, our toll roads take care of us. It's the downtown area that's really congested. Great lifestyle, golfing. My agent Chad, you met out in front. We try to get out there and go golfing at least 9 holes every week. This is Avery Ranch, where I sold over 250 homes. I got in front of this 2 years before they opened up the subdivision. It was 4,400 homes. I sold 17 homes the first day that it opened up, and over 300 since then. So great lifestyle. Lake Travis is our beach. It's our ocean, just 14 miles to the west. It's my daughter, who's a professional musician, recording artist. She's on her 4th CD. Austin, Texas, in 2019, best places, 25 top best places to live by U.S. News and World Report. I think we're number 5 now, and it probably has to do with the spike in the affordability issue. It's kind of a little comparison of what you get in Austin for those that.
Oh, wow.
So this is actually a house I sold to Mr. I call him Mr. Bill because I don't want to tell him his last name, but he sold this house. So my clicker's not working, or it should. It doesn't want to work. Okay. The house on the left, that's in San Mateo, and it sold for $1.44 million. And he turned that house into these 9 houses tax deferred through a 1031 tax deferred exchange. So let's get back to the house though. I'm here for several purposes. One is I want to help investors invest in Texas and move their equity to diversify into another state and to grow exponentially through investment real estate like Richard has and like I have. The other one, the other purpose is for reload. Because my perfect client, I tell Richard this, is somebody has a $2 million house, primary residence to sell, and a rental property they inherited from mom and dad that they owe nothing on here in the Bay Area. Turn around and have them be able to buy this custom 5,400 square foot house with a 5-car garage if they want to, overlooking Lake Travis, and then with that rental property do a 1031 tax deferred exchange and buy these 9 properties. And Mr. Bill pretty much had most of these paid off. So his income went from this little 3-bedroom, 1-bath, 1-car garage at $3,600 a month to this house, these 9 houses bringing in $13,500 gross per month. Same asset class. I mean, it's just single family, and he expanded it to this, but he quadrupled his cash flow, and it helped him retire. He didn't know anything. He didn't know anything about real estate, except he bought a home or 2 for me along the way. And then when he came to this, I said, this is what we're going to do. There's a whole podcast that I've done on this 1031 tax deferred exchange because I covered every one of the pitfalls. We had to employ private money, hard money, reverse exchange. We had to schmooze the builder. This is a D.R. Horton product up in Temple, Texas, and the price points were $170,000, $180,000. Now they're close to about $100,000 more each. You only did this 3 or 4 years ago. These each have gone up $100,000 in value. So that's $900,000 in appreciation. There was some pretty cool charts though about what would have happened if he delayed. So he got really blessed. He got really lucky. This is also kind of my heartfelt. I was doing Santa Clara Hyatt House where I met with Richard 2 years ago, almost 2 years ago. We were talking there just to a group of people like you, talking about taxes, talking about real estate. But on the way there, I saw these your service workers in the motorhomes. You know where I'm talking about. It really kind of hurt my heart that they can't even afford a house. They're cops and our teachers, and they got to live in out here in a motorhome. It's kind of a desperate situation, and so that's the other purpose. I have get in the motorhome and drive to Austin, and we put you in a house there for $1,300 a month. Anyways, so this is kind of what's happened. This is when I came out. This is when pandemic day hit, March 2020, and it was $335 was the median price, and then right now, a year and a half later, is $450,000. So, and one of our counties where I live, Williamson County, went up 45% from July to July of last year in 1 year. So we had 8 years worth of appreciation in 1 year. So that's kind of what's happened since, but now I'm going to kind of get into a little bit more. Let me roll down and look at, because I can't cover the whole PowerPoint presentation because it wouldn't be fair to you or to Richard. I'm going to come back to these slides because this is important. This is where we're going to focus what we're going to do. I'm going to come back to those. But I just want to run down the rich dad, poor dad story. This is my poor dad was my real estate attorney father that didn't keep his properties. He bought and sold, bought and sold, bought and sold. My father-in-law was in that picture with the cool glasses in my team. He's still around. He's 82 years old. He's still selling real estate, buying real estate, but he doesn't have to work anymore because he kept all of his properties. And so I like the idea is that one of the things that I'm noticing in the Bay Area is you're very much about community, and that's what I'd really like to build. Is I've already started building a community, and so I got some really cool programs coming up. All part of our people is a community program where we can mastermind, brainstorm together. Okay, back to this. This is Lexington Lane. This is the house I grew up in. My first memories, 1963. Paid $17,000 for it. These are the pictures in it of a year and a half ago when they sold it for $1.6 million. You can see, though, when I came out in 2017 and 18, I'm saying, hey, something's going to happen, guys. Something's going to happen to this market. I don't know what it is. It could be a 9/11. I'm not a doomsayer. It could be a 9/11. It could be a bird flu. I even said that, and I'm sorry I said it. But boom, it dropped. It dropped that much, but it's come back. But you can see what's happened. We got to study your markets. You got to study what's happening to the values. It bounced along really with no appreciation until the supply-demand pandemic kicked back in and brought the value back up. But I bring that up because if Mr. Bill had basically the same pattern, if he didn't sell at 1.4, he would have lost. It dropped to 1.1 within 6 months. He would have lost $300,000 by waiting. Timing is everything. All right, so this is my dad sold that house. $17,000. He sold it for I think 27,000. He bought this with a VA loan, and this is in Palos Verdes. You can imagine what that's worth. I think it's 1.5 for that. And the bottom line is, I started going down. Every house I bought and sold that he bought and sold or we rented, that if he just held on to the ones we lived in, not counting just investing, he'd been worth. It was 10 million, but now it's 12 million, free and clear. It would have been all free and clear. It would have made a bit of difference in his last years of life. I ended up paying his rent for the last few years of his life because he didn't hold on to his real estate. And so it was an honor to do that. But I like the idea of what happened with my rich dad, who's still alive. He just bought and hold, exchange, tax deferred, bought, hold, build up a real estate portfolio, probably worth about $25 million. And that is going to make our lives a little easier when the time comes. And it'll be tax-free since we haven't changed our our stepped-up basis issue that Biden wanted to take away from us. Okay, this is Richard's favorite chart, and I'm going to kind of just show you. I'm not going to go over this because I could take 20 minutes on this. But the bottom line is we're about, for the last 40 years, have been on kind of counter cycles with the coasts, and this has been going on since the 80s, the 90s, 2000s, and now we're here again in late 2019, 2020, that's when we saw the spike in what happened to Austin. But you guys, as we saw on this chart, had leveled out somewhat during that same time. So even in the last couple of years, we've been on this counter cycle. Here's the Mr. Bill's house. He 1031 to this, and you can see this is when he sold it. And if he waited just a few months, it would have dropped. He sold it for 1.4. It would have went to 1.050, almost a $400,000 loss. And then he wouldn't have been able to buy those 9 properties. So timing is everything. Just kind of some quick charts. I'm not going to go over these very much. All it is, the bottom line is that the prices keep going up, and this going back 40 years, you can, even during recessions, and the worst recessions we've ever, the Great Recession, prices didn't drop in Austin. So you have security. The volume dropped, the number of homes that sold dropped. Population's continuing to hockey stick to 250 people a day moving there. There it is again, jobs, wherever. Real estate, one of your research is, where are jobs moving? You gotta find out, get ahead of those, and that's what's been happening. All the jobs have been moving there. 7,000 companies have moved from California to Texas in the last 7 years. The annual appreciation rate is normally, as you can see how this chart is, 5%, but right now that's spiked and it did this. So, and you can see this is a house I own in Avery Ranch, which is about 10 minutes from the new Apple facility. By the way, Apple's opening in 2022. The building's done. It's going to house 6,000 employees, a high, software engineer type employees, not manufacturing. And that Apple's going to become the largest private employer in Austin. So that being said, if you can get in the high-tech corridor along with the Facebooks and all that, this is a great place to be. But the prices, you can see, this house doubled in value since 2017. And is that going to continue? Probably not. You can see it's already did its little turn there. But who cares? It went up this much. I pulled $250,000 out on a cash out refinance and bought a couple more properties free and clear. So that's the idea. Is you can, as it went up, I was able to now pull out cash out of there and buy more property, and not a taxable event. I've got them free and clear. Rents are coming in amazing on this property. So rather than sell it, I pulled the cash out. This one of the things Richard would talk about. Pulling cash out is not a taxable event. Selling it outright, if I sold it right now, I'd get slammed with taxes. So will I ever sell it? No. But if I do want to build more portfolio and use this property, I'll do a 1031 tax deferred exchange. Does everybody know anybody not know what a 1031 tax deferred exchange is? Everybody know what a 1031 tax deferred exchange? Okay, so we don't have to go too much. I'll let Richard cover that. All right, here's what we're going to talk about. Let me see if there's anything. You need a team. And I call team, trusted experts, advisors, and mentors. The stuff you're not going to find, this is not going to find, you're going to find this stuff in universities, even in any of the typical guru stuff, real estate guru stuff. We are put together a team of trusted experts, advisors. And it kind of looks like this. You're the millionaire real estate, multi-millionaire real estate investor in the middle. The inner circle would be somebody like me, a partner, a mentor in the real estate realm, and consultants. And I have access to some of the best consultants in the business, including Richard Smith, who owns a lot of real estate and is a tax advisor. And as you can see, we help with the support circle. This is all part of we got attorneys for 1031s, or if there's any issues, close relationships with lenders, real estate agents, other investors, great source of business. Accountants, you need a CPA, we got one. We've got a tax advisor right here. Contractors, and then big deals, property managers. I'm going to let Richard talk a little bit. We'll banter a little bit about property management and how to make that work for you, because that's the key to the success of your real estate investment. It can make or break. And then this relationship factor has to do with I've been in Austin for 30 years. I've proven myself. The builders all know me. The C-level employers of the builders all know me. The on-site agents know me. They call me first when they have a house that they need to sell, and especially even an off-market house that hasn't hit the market. And then we talked about the good deals, great deals. The lower end can cause a lot more hassles, but there's a better cash flow. The middle of the road is great. That's median price. We don't usually go into luxury unless you're relocating. But the great deals are right here in about that 12 to 17, 1,800 square foot single family home. Most of what we do is new construction or newer. And this is just a typical Central Texas house. I own two of these. It's called a Roosevelt Plan, 1,650 square feet. The deco now is more of the grays like you see in the hotel here. It's winter colors. This was done with fall colors. All upgraded granite countertops, tile floors, vinyl luxury plank. This house you can purchase for about $230,000, $240,000 right now. And here's the numbers. And so what I'm going to do is I'm going to send. This is a great. This is an Excel spreadsheet. I'm going to send this to you. I'm going to email it to you, because this is what gets people excited about what we're doing here. We don't get rich so much on the $500 positive that this property is going to throw off. In fact, I say don't even pocket it, pay it towards the mortgage. So when you look at the whole, these are all your numbers, and you can't even see it here, so I'm not going to spend the time on it. But every time I sell it or present a property, we're going to send this pro forma out, which is going to and it can play with the numbers. There's different factors, tax rate. There's about 6 different factors that my assistant plugs in. It takes about 5 minutes to plug in the numbers, and it spits out what the return on the investment is going to be. Then this is something we just added, and I know Richard's a cash flow guy, but and that the equity is that build up. The appreciation is more like icing on the cake, but you can't ignore it, Richard. You can't ignore it. So this is the typical 247 purchase price, putting 25% down. Appraised value 254, so you got a little bump on price to begin with, and then 7% appreciation. So last year, San Antonio was 18%. Austin Metro was somewhere around 35%. That's not sustainable. It's not going to continue, but we should still be in double digits. We should still be at least 1% per month, which works great as far as appreciation. But I just put a 7% rate in there. And if you start looking at exponential, this is just the value of the property going up at 7%, and then the loan balance going down. Look, in 3 years, it's 124% return. That has nothing to do with the positive cash flow. So, that's what's really exciting. It doesn't count for those 20% or 40% bumps. Sriram, can I talk about yours?
Go ahead.
Sriram bought a house, and actually, I'll show it to you. He came out very nervous. Came out on our bus tour. Here's our bus tour. That's at the Domain, where the Amazon, Facebook, and all that, Indeed, VRBO. That was November of what, Chad? November of 2 years ago?
2019. Oh my God.
You're on it. You're on this bus. All right, welcome back. All right, so yeah, thanks for coming. Well, there's even Chad. Chad's on the bus. Chad brought his stepson, right? Yeah. Okay. This is Sri's house. So guess what? He picked right. This is before Tesla announced their facility 10 minutes down the street.
Wow.
Bought it for $230,000. 1,600 square feet. Nervous as heck. I don't know if I can do this. I don't know, Ken. Are you sure about this? We sat over at a Hyatt house in the River Mark at the coffee table, and he's kind of, I answered all his questions, kind of still looking at me like, I don't know. And so he ended up taking the plunge. We got him through it. This is your typical decorator, real nice vinyl plank floors. There's nothing wrong with it. And what we were doing here was we were talking to our lender, our mortgage lender, and our property manager. So our team members were there to greet us on the bus. Now we do it virtually. This is also when we did the bus tour. This is an on-site sales agent. There are gatekeepers. These are my friends. Because the on-site sales agents, they're the ones that control all that shadow inventory we wouldn't know about. In fact, Sri, you got one in the same neighborhood after you bought the one we just showed, because he had an inventory come up and he called us first. So we sell properties that you would never see hit the open market, and that's from years of building good relationships with these on-site agents and management. Management knows when I'm bringing a buyer, they know they're well qualified, well coached, and usually some of them paying cash, or they're putting 25% down. So they walked us through. There's the actual bus tour, and there's some other people that were on. This was a different bus. And then we have to stop for barbecue, so we had to stop for. She's right there. Did you have fun on that trip?
Yeah, we did.
Okay, cool. So come on back. So this is what we're doing is today I was going to be doing a virtual bus tour. I don't have time to do a virtual bus tour. I'll go with some highlights. I'm going to record one for you guys. That way it's much more a much more controlled environment. So by the end of this week, I'll send it on out to you so you can go what we call a deep dive. All right, going back to, don't stop there. Bring your kids. This is Tom Apke, very wealthy real estate investor. You should speak at the Marshall Reddick Clubs. He's an attorney from Southern California, retired. He brought his son out, and they bought this house. He bought this house for him. So that's another thing that I really have a heart for is the millennials are coming. So when people say, oh, the market's turning and everything, I'm going to tell you right now, it may be taking a little bit of a seasonal break, but we're 4 to 6 million houses short in the United States of new construction. We're only building 1.5 million a year. And guess what? Millennials are coming of buying age, and they need housing. And so, but I still saw last month, as far as I could see when I was in Newport Beach, freighters out in the ocean with all of our windows and our doors and our chips for the appliances. And I'm going, we're still in a supply chain shortage, and that's not alleviating. When we talk to our concierges and our builders, they're saying the same thing. We might have a house that's almost ready, but they can't get the appliances, or the glue that glues the floor down. There's a shortage of that. So there's that, and then all of a sudden interest rates are pushing up. Always when interest rates start pushing up, that's when there's a surge of people getting in the market to try to get in and get their cheap money while it's still available. And it's going to continue to go up because I'm seeing a labor shortage, meaning labor is going to cost more to get the labor workers, and we're seeing a supply shortage still. and then we're going to see this huge shadow demand that's going to come in the spring of next year. So I say secure your property now, because wherever you end up, whether it be a submarket or whether you end up in Austin, because you can still get the low rates and you're going to beat the spring rush. I can tell you, I guarantee you, there's going to be another mad dash. Because a lot of people that have been on the sideline that gave up. I had one guy that made an offer $60,000 more than asking price in Leander, and it was only at $320,000 asking. He was one of 152 offers. 152 offers. That was the record that I saw. We were one of them. It went for $110,000 over asking price. Was it worth it? It really helped my values, so I appreciate that. But so he gave up. And he'll come back probably, but he gave up on trying to keep making offer out. It's not like that right now. There's a breather. There's a chance to get your offer in and not have to go through the craziness. And so the market is loosening up and opening up. All right, let's get back into. I wanted to go through. A lot of people come to me and they say, okay, I'm literally sold over a couple thousand houses. We're tracking about 80 to 100 contracts at any one time. In other words, under contract. We did under contract and closed this year $53 million with our small team in sales, and we still got a month and a half to go. So, the thing is about this is we're not dealing. I'm not saying that to impress you. I'm saying that we have got the system down, and now I'm going to go through that because I kind of failed to do that over our presentations. What's this all about? How do I get started and what do I do? All right, so. Got some resources for you. We're going to kind of go over those. You can take some notes, but we'll also have this video. My website's buyaustin.com. Had that URL since .coms came out. I had a lot of other cool ones too. I had livemusiccapitaloftheworld.com, which is what Austin is, but I gave it up for some stupid reason. Okay, so that's a resource. Also, my video channel is kenrenner.tv, Ken with two N's, renner.tv, which is the #1 real estate video channel in the nation. Some cool resources here. This is my House Hunter shows, and then below it, this is really good podcast to listen to. This is all geared towards education, not only the current market stats, but how to optimize your properties, some pitfalls, avoid pitfalls, and all that kind of stuff. So I tell in my onboarding email, which is how it really first starts. You'll usually have somebody call me from here and say, okay, hi, I would like to meet with you and talk with you about it. We have about a 15 or 20 minute conversation about your needs, your dreams, your goals, what it is, how I might be able to help that. Then I send you a onboarding email. It usually comes in 3 pieces because I don't want to overwhelm. I have a tendency, as Richard knows, to give out way too much information and people are like, whoa, wait a minute. But I'm going to show you that onboarding email here. Find it. I had it up here. It is right in front of me. Okay. So the first one is kind of I want to find out who I'm talking to, where they're qualified. That's why when we go through this, the first thing is the real estate masterclass that I do. It's only 45 minutes long, and it's this PowerPoint. I go through the entire thing, so you don't have to it's the same slideshow that I've sent you with that QR code. So I'll just take a look. Be overtaking that to become the largest private employer in our area. So 7,000 views. This is going to give you a really good overview of why we're doing what we've been doing here for all these years. Okay, going back to the email. Then there's Ken's Radio, and what that is just simply a link to the podcast, which is totally educational and way up to date. This is the one that 7% there you go. Year. So I go over the stats first, and I go over some really good educational spot about this. So look at that, 37%.
Hey, Ken?
Yeah.
You're not showing that on the screen.
Oh, I'm sorry. That's why I'm so bad at this. Let me go back here. There we go. Let me run back through there. So what do we have? First of all, buyaustin.com. You see that? Okay. buyaustin.com, and that's you can there's relocating, investing, and others. And there's a questionnaire. You watch the video, and then there's a questionnaire and that's investor questionnaire is on your link thing that I sent you as well. To be able to, I need to find out where you're at and whether you're ready to go or whether we need more coaching. Let's see. There you go. So the Austin Investment webinar is this. We're able to work from home, and they don't Yep. And then Ken's Radio is simply the podcast. You can go down these. These are in chronological order, going backwards in time. And then you can schedule an appointment with me. This is one of the coolest things my IT guy set up for me, is making my life so much easier, is an appointment calendar. So it's called ken.com, and you can pick your time, and I'll call you, and we'll do either a phone call or a Zoom. And so, it goes out a week. So on Thursday, I've got all these times available. So, and it's, get on the phone, 20-minute, 30-minute call. That's the easy way to set an appointment. That, I'll always be there, unless there's something really major that's distracting me. But, and then also the communication texting works great. It's funny, I had my phone here all day. I think it rang once and it was a spam call. So people go, oh, he's so busy, I don't want to bother him. Look at all this stuff, he did 53 million in 1 year. The phone doesn't ring, it's because we have a team and everything's flowing, everything's going. And so one of the cool things is being able to schedule a call without having to play this phone tag stuff that we've been so used to. So I love that. Texting is really good for quick questions. And then email is great for more extensive questions. And of course, we can always get on a phone call or a Zoom call. So I'm here to serve. That's the whole bottom line, and really to help make people having fun, as we call it. And our motto for our company is having fun, making dreams come true through real estate. And Richard makes it fun too. Okay, so this would be the first email, because there's enough content to get started. Then the second email would be a deep dive email, and this is where we go into specific communities and talk about what's happening, what you can get right now. And so once again, you can book another call with me, or like, for instance, this link right here is something you would never get. You would never be able to get it, but I'm giving it to you. This is all the inventory for Lennar Homes, the biggest builder in Austin. As a PDF, it's updated in real time. So as they sell them or put more on, it's a cool link. Okay, so this didn't work. This happened to me yesterday. So I did it again and it came up. There you go. So this is a lot of inventory. It's gotten a lot less. This is Austin. The key here, though, is they see these double dot asterisks. You can't really see this. That says it's open to investors. I've got all kinds of lists like this. The other one's Builder Boost, which is a great podcast or interview I did with the lady from Builder Boost. So all this is insider information. This is not stuff they give out to the public, including their phone numbers for the. It's like they don't give this out to the public. They give it to trusted realtors because they know that I'm giving it to you because you're my friends. So, but yeah, so that's kind of where we're at now. I'm gonna go through something that was. Oh yeah, here's the next thing. These are the pro formas that you would see. You got also a video showing. These are actually walkthroughs of properties. Like when we walk through Srirams, we did a videotape for video. Same thing is happening. The properties we're offering, we do a video walkthrough. Unless things happen really quick. So sometimes you can't wait for us to give you a video to say, yes, I want the property. But you'll get more educated as you go as we provide more. So Lennar Homes, this is in San Marcos, which is the very south end of the Austin Metro. This is one of the pro formas. I'm not going to go over the numbers too much, but this was based on $293 purchase price, throwing off about $267 cash flow. That's still in Austin, still be able to generate cash flow in Austin. Our other good market that I own more properties here by number than in Austin is Temple and Belton area. And this house was a resale from an investor who sold it. He paid $160 for it 2 years ago. My investor bought it for $205, which was still a good deal. And it's a cash flow of about $300 a month, and about $200 for, let's see, yeah, no, it's $300 a month, $290. Then going south to San Antonio, I've got this one. This is an actual real case scenario. Is a Lennar house that is in northeast San Antonio near the Air Force Base, and this is one of our target areas. Most of these neighborhoods, when we go into them with my clients, my network of people like you, we may buy a dozen or 20. Caseta Ranch, in January of last year, they sold 52 houses in one day. That's when I knew, and they had another subdivision down the street that sold 60 houses in one day. That's when I got on the podcast from back then. I said, there's no way they're going to be able to build these houses. there's not enough, forget the supply chain, just even without the lumber prices and the lumber shortage. I go, that's a creator. I go, there's no way. There's no way they're gonna be, so these houses took almost a year to build and went up $100,000 to $110,000 during the time they were being built. And it's still happening now. Not at quite that pace. Srimama, do you know what your house is worth now? We're gonna go over that in our meeting, so.
I have no idea.
So he paid $230 for it 2 years ago, or was it 3?
Yeah, 2 years.
Well, I know your Carlson Place house that you bought for, what, $230?
Yeah.
He paid, this is in Georgetown, he paid $230 for it, and it's worth almost $400. So, in 2 years. So, that's what's happening with that. Okay, so then next, this is more, this is a timeline and preferred vendor email. This is really granular down to the steps of the way, and we're gonna go over that here quickly, of giving you a course of a year, what it would look like to buy a property and then onward. But I have all my networks of help are on this email. This would be something that we would already have done after we're in, when you're ready to start moving through the process, so that you have everybody's phone number and email address that's part of our team. Once again, this is a long email, so I don't usually overwhelm people with it, but this kind of gives you what you expect, the time frames. For instance, a new home, 6 to 10 months to close, sometimes a year. When do you engage your mortgage lender? When do you engage your property inspector? When do you engage your property manager and the homeowners? There's all time frames in here. We help you keep track of those time frames. My assistant, who's a full-time walkthrough assistant, that's all she does is drive across. She's a road warrior going from walkthrough to walkthrough, because there's 2 walkthroughs that we have to attend on every closing. So she handles that. She'll be sending this out 60 days before closing, so you have everything. She'll send it out 90 days or a few weeks before closing, because you need to know who your team is and be able to quickly access them. Here, this is me, our team. Michelle's my wife. I call her it says CFO, but she's really the CCC. That's the chief check casher. She likes money, and money likes her. Chad Hall. That's Chad Hall. Call Chad Hall, and he's my right-hand guy. He also is helping he's an inventory manager. We're combing through the MLSs, combing through those builder websites daily to try to find inventory. And that's our biggest supply chain, is finding enough good properties for you guys, because we are very picky about what we're buying. All right, George Walters, my father-in-law, who's a DECA millionaire, doesn't have to work anymore, and a mentor. Andrea's my office manager. Sabrina is the walkthrough manager, and then we have a contract coordinator, Lisa. She helps us write contracts and what have you. Lenders, these are for your resources. Richard Advani actually is a client of mine. He was the number three loan officer in all of Wells Fargo system nationwide. Does almost exclusively rental properties, and he owns properties all over the United States, so he's a good person to know. But he also has unlimited. With financing, you go up to 10 properties in your name before Fannie Mae and Freddie Mac don't want to lend you any more money. And there's a strategy to that. You can actually break it up between husband and wife, and you can go to 20 under that same rule. Some of the coaching things that I do. But Richard has programs that are reasonably interest rate programs that go beyond the 10 properties with 30-year or even 40-year amortization. Also, he'll lend to LLCs, which is almost unheard of if you want to go down that road. So the thing is that this is a specialist. I'm a specialist. Kind of like with a doctor's been doing a business for 40 years. That's the guy, the specialist is I want. You pay more for a specialist. Good news for you guys is you don't pay more. We get paid the same 3% from the builder or the seller as everybody, as the guy that just got their real estate license. So that's the thing, and that's another thing I want to bring up is a lot of people, come to me all along the way, usually about 10 or 20%, and say, how much are you going to give me back of your commission? And I'm saying, let me think. When you're working at Apple and they give you a month, 4 weeks worth of work and pay, do you come to them and say, you know what, you did a great month's work, but we want to take about a week's worth of that wages off and not pay you because we'd like to hold that back. So I give that example because I get a lot of people. What I had even the other day on somebody's closing next month, he goes, well, you said you'd give me a little bit back. And I said, how much did you make in equity on that purchase already? Well, I made $100,000. Now you want $2,000 of my commission, and you made $100,000 in equity? He goes, okay, never mind. So that's the thing is that we try not to discount the commission. We work too hard. Chad brought up a good point. Yesterday, it's like when we're making offers, what seems so easy to make that offer. You know how many offers he's written for just one client? We only get paid on one, or maybe not get paid at all. So we do all this for free up front. Got your title companies, inspectors, insurance, and attorneys, 1031 exchange accommodators. Need to put Richard on here as our.
Please do.
Yeah, definitely. That would be nice, wouldn't it? I'll put him on here. Anyways, all in one place. It's a rather extensive email. I'm going to send it to you anyways, just so you have it. And these are handpicked people I've been working with for years. Okay? All right. So I'm going to get into before. What time we got, Richard?
You've been on for an hour.
Okay.
Not quite.
Because we want to get into. Here we go. I've done this so many times, thousands of times. I've failed sometimes to assume that it's like some people don't know exactly what's happening during this whole thing. Like, how does this all work? You know. So I'll kind of just go down a typical scenario. We're going to take a year. We're going to take 2022. We're almost there. We're going to talk about January. We're going to talk about March, June, October. Okay, so we're right about here. All right, so we do mostly new construction. We also do resales. We don't ignore the resales. Is Sheila here? No? Okay. So Sheila bought a resale from us that went really smooth. Already had a tenant in place, so that was nice. And there's a different time frame for new construction than there is for resale, and a different process. And it's in that timeline that I did. I go over both scenarios. But I just want to kind of go over what your job is and what our job is as we go through a year. This is starting from if you purchased one, started to engage with us now, and we purchased one that closes somewhere in here, and then what the process is getting it up and running in the rents. And we'll also talk about some things like when are the property taxes due, when are the income taxes are due, and that's when we'll get Richard to come over here and steal the thunder, because he's going to save you tens of thousands of dollars in taxes with his cost segregation analysis. So we'll save that surprise for Richard here. Okay, so we're in middle of November here. One thing to remember with builders, and we love working with the builders because it's a brand new house. Tenants love it. It's like, it's not like a brand new car. It doesn't start dropping in value right as soon as you buy it. It's an asset that grows pretty quickly. Okay, so starting in November, this would be kind of how the scenario would go. You would contact me through any one of these sources, and we'd set up the 20-minute meeting. Okay. Next thing, we would send you the onboarding email with all of our contacts, all of our resources. Send the onboarding meeting. I know you can't read this, but that's okay. It's going to be on the video. And then we're going to get more specific. We'll have another call, and we're going to talk about specific properties. In the meantime, you're going to start getting emails and also our hot properties of the week. If whatever comes up, we see something hit the market, we're going to blast it out and get it. So. And we're going to get specific and get you, then we're going to get you hooked up with a loan officer, which any of those three that I have on there are great, but I would, you want to get pre-approved for your loan. Can't do anything without that, or proof of funds. So if you're going to pay cash, you can do the proof of funds. And so you really have to get that done, because this is part of the strategy that we help you with, how to structure your mortgages. Big deal. Like we talked about, should we take it with both of our names on title? Should we take the mortgage in? You only want one person, you can't be on that mortgage, because every time people go on the mortgage, if two people go on the same mortgage, you just used up 2 of your 10, right? So the good thing too is I owned a mortgage company, ran one for over 10 years. So I know the mortgage side backwards and forwards. So they can't pull the wool over my eyes on your behalf. And also the builder's lender usually is who you go with. But oftentimes they don't give you the best rate, so we go and fight for you, because they give you a lot of incentive money if you use the builder's lender. We'll fight for you and make sure. I'm all about your side. What can we get on your side of the table? So
what about if you have your own pre-approval already from your...
It's fine for making offers, but beware sometimes with like Wells Fargo, except for Richard when he was working there, like Bank of America pre-approval letters, U.S. Bank. Who has Lena's?
Use one example, okay? Erase.
Which one?
Erase.
Arez, gosh. Yeah, so which one was yours? So you bought the house in, two houses in Belton, in one in
So I used
Belton.
PNC and then they had issued the appraisal. I had to switch the loan officer kind of the last minute and get more grace period from the builder.
Well, worse than that, appraisals are a big issue. That's our supply chain shortage in the loan business. They're taking sometimes 6 weeks, which would only normally take 10 days to 2 weeks. And so I'll give the U.S. Bank, because it almost cost my client $25,000 in earnest money. U.S. Bank, in August, Lennar was trying to close a house that she had put under contract. She went with U.S. Bank, not with Lennar Mortgage. And it didn't close on time. They were gonna keep her 10% earnest money, $25K, and kick her off and sell it to somebody else for more. Just for not making, because I told you, when I talk about I put these quarters up here for a reason, because Lennar has their quarters. And so does any other builder. They want to meet those. And the appraisal didn't come in time. And because we didn't have a relationship with U.S. Bank, we had no leverage. They actually wanted to kick us to the curb after we're like, he's blowing the deal and costing her $25,000 earnest money. It only closed a few days late, but it was a big stressful hassle because she didn't use that didn't use our advice on the lender to use. So a lot of appraisals are a big deal, and in any. And we're here to help you through it. But you want to get pre-approved, then you're pretty much ready to go. This is what I call an A borrower. In other words, active, ready, willing, and able. We have B borrowers, they're just getting ready, but they still need more education. They're not motivated. Their timing's different. Then we have C borrowers who they don't care. I mean, I can take it or leave it. They're not. And then we have D borrowers who don't want to do business with us. So I want to work with the people who are ready, pre-approved, and ready to go because. It saves everybody time, and you can jump on properties right away. All right, so you started off with our first meeting. Maybe within a week, you're getting your pre-approval letter. And then we're looking at if we're looking at a resale home, you're looking at 60 to 90 days to find it. We're looking at 30 days to find the property. Yeah, in December goes, and then 2 months to close. So. In this process, on a resale, we put it under contract. You'll have up to 7 to 10 days to get your inspection done, negotiate the repairs, and then mortgage is done about 30 days later, and then you're closing, like I said, 60 to 90 days into the contract. So 30 days to find the property, 2 months to close. With new construction, it's usually, depending on the builder, it can stretch out 6 months, okay, or longer, okay. The process that works is you start off here, you put your earnest money up, the earnest money deposit, and then probably not going to do the deco, which is the decorating of the home. They're pretty much selling them as is, and then, but if you do, you get to pick all the colors out, and then you're going to get your mortgage, and usually you may switch from the one that you got pre-approved with to the builder's lender because they might give you $10,000 if you use the builder's lender. So we may switch to them, and then pretty much after that, there's not much for you to do. They got to pull the permits, get the house built, and it's going to close somewhere out here. Seasonality-wise, the best times for rentals are somewhere in the May to August timeframe, the seasonality of it. So if you can get your home to close in May, June, July, it's the best time. You're going to get everybody on that yearly cycle. In Austin, it's not that big of a deal. Our rentals are going very quickly, and some at multiple offers, bidding wars. I had mine put on the market for $3,100. I got $3,300 for it. So the rentals are, but in other submarkets, it's more seasonal, like the Temple Belton market. November, December is not the best time to be trying to rent, more seasonal. So you have to know your builder's fiscal year ends. For instance, for D.R. Horton, it's September 30th. So there's a lot of good deals that happen the 2 months prior to September 30th, D.R. Horton. Lennar's is November 30th. So if we have a cash buyer, they'll give you some deep discounts because we got only a couple weeks to close. And the rest of them are on regular quarters. So we also monitor that when are their deals going to start hitting? It's when they give some pretty deep discounts. Okay, so that's kind of the process of if your closing's happening here about 60 days out, you're going to want to consider locking your loan, your interest rate. And the sooner the better right now, because they're going up. And then about 30 days out, you want to be in contact with our property manager to get all that set up. Because the number one thing that investors, they put on the investor worksheet that I give out, number one thing they say is they don't want is an empty house. So we're investors too. We don't like empty houses at all. So we've got a huge amount of strategies about how to get those things leased, and the expectation that you should have. You expect about 2 to 3 weeks of vacancy. So people go, it's been a week since closing and it hasn't rented. Just plan on Sriram, how long did it take your house to get rented? 3 weeks, okay. So and that's typical. But there's also some other strategies. When you're buying in a new construction subdivision, like Sriram was, you have construction going all around. It's like that's where you want to be, the very first house in a brand new community. But these tenants are living in a huge construction zone, super inconvenient. I just was in one, spent the last year in my construction zone. It's a pain. So we have strategies around that. Give them a shorter term lease, give them lower rent during that 6 months, get them in that summer cycle, maybe do an 18-month lease. Lower that rent, get somebody in there while they have to deal with all the mariachi music and the burrito wrappers flying everywhere. So that's kind of what we want to do is we have strategies with our property managers to help them help you. And it's very regional. So if Temple Belton is an area, Waco is different than San Antonio. They do things differently than Austin. And that's kind of our market area. So that being said, time frames that you have to be considering. I think this is pretty much to close. We have 2 walkthroughs. If this was a new construction house, or let's say it's over here new construction, there's a walkthrough about a week before closing. Activity starts up when you're locking your loan 60 days out, and then you're also engaging with property management. And we also do pre-leasing, because we have other houses closing in the neighborhood. We can flip people from tenants, their perspective on one house to the next one if it's already leased. We have a final walkthrough, which we tag up everything. Sabrina handles that for you. And then we have a second walkthrough, which is everything's been signed off about a few days later. You hire your inspector at this time. On a resale, you hire your inspector at the beginning. On a new construction home, you do it at the end. So there's an inspection that's done. That's your private inspector. There's lots of inspections along the way, but the one that you hire if you want peace of mind. And then you close. How you close is they FedEx all the documents to you with a mobile notary. They come to your door, your office, your house, and you don't have to go anywhere. So kind of with this whole process, we handle all this, and the builder handles a lot of it. It's great because they handle a lot of the paperwork too. Your real job is to pick a property with my help and Chad's help. Pick a house and get your loan. We handle everything else, unless there's a deco involved. And Sure, I mean, you did your deco through Zoom, was that it? Or did you even do deco?
For the first 2 properties, I was there in person.
Yeah.
And off late, it's just a phone call.
Yeah.
Not
Yes.
even a Zoom.
So pick a house and get your loan. That's kind of that, and it doesn't get much easier than that. And hopefully, if we watch what's happened, if we're going 1% per month, which that's only 12% per year, which is still a hefty clip for what we're used to. 40 years, 12% would be a huge clip. You're going to walk in after 6-8 months with potentially $20,000 or $30,000 equity. We don't know what's going to happen as the market changes, but we're seeing that there's a lot of inventory that's been held up because of supply constraints. They're all going to hit right here, right in the spring buying season, and all the buyers are going to be coming, and all the investors are going to be coming. So we're going to see a big activity in Austin and surrounding areas in that time frame.
And Temple is around 12 to 13 months ago.
Yeah. So when did you start your contract?
Exactly November last year.
November, and you just closed on it.
12 months ago.
Yeah, 12 months. Yeah. So,
With the
but I did the same thing over in Northgate. And did you bought in Lake Point and
Lake Crossing,
Lake Point Crossing, and the Bend. So, do you know what the appraisals came in at?
About $40,000 more.
Yeah, mine was up 60. So from when I started in January to when I closed my 1,500 square foot, I paid $192 and appraisal came in at $260. And it still works. I mean, getting $1,825 rent. So it still works at $250, $260.
Right. The rent is
Couple more timeframes about Texas that's different than is property taxes, and then we're going to let Richard get up here and hammer us about income taxes. First is going to be January 1st. The tax assessor comes out, or does it virtually. And that's the value they set for your rental property, and then they will set that value based on a January 1st, and May is your deadline. They'll send it over in April. They'll send you an assessment. This is what we think your house is worth, and then you have an opportunity to protest that property tax value, which I do every year, and Richard does every year, and then you have up until May 15th to file that protest. Then they'll make an appointment with you somewhere here to have a meeting with you, an informal meeting. We've got great strategies over that about why you think your value should be less than what they assessed it at. And we can help you with that. I've got a whole class on it. It's a video in there about how to protest your property taxes.
You want it less because you want your taxes to be lower, right?
Of course. Yeah, we always want to pay less in taxes than there's no more than our fair share. And that's what we try to do. Everything that we're doing is trying to optimize your property. Okay, so then we got another big date, and that's going to be April 15th.
Or April 17th or May 17th.
I will come back to April 15th. We all know that one. Okay, so let's see what we're talking about. Timelines. So the assessment comes out, you can protest it, hopefully you win, and they'll lower the value, and then November they're due on taxes, and by January 31st they are late. So there's some tax strategies too about when you pay your property taxes. So Richard's just genius on all this stuff because it's fun to not pay more than your fair share.
Ken, it's so tough when you just bought it, that they know exactly what you paid for it. That's a hard argument to have.
Well, you don't have to show. Okay, Texas is a non-disclosure state, so that's one of the things when we're looking at here. Let's go back to the onboarding process because there's things that once we've got you ready, willing, and able, we're going to set you up on a client gateway for our two markets. We have the Temple Belton market, and there's New Braunfels, San Antonio market, amazing markets, and then we have Austin. And it takes 3 different MLSs to cover all those areas. And so we'll set up, and after our meeting and we're ready to go, we're going to set up automatic searches for you so that every day in your inbox is going to be a list of properties that meet our parameters. There's also that aren't in the MLS is a lot of the new construction stuff. So we have other resources for that we'll be able to reach with you. So once you're ready, willing, and able, that's when we start getting going with searching for the properties to acquire them. Okay. So let's see. Got through there. Pay your taxes by January 31st. We're good to go. But then we've got April 15th coming, and I'm going to let Richard take over and give us some really cool ways to maximize your investment based on the IRS tax laws and the California tax laws. So, Richard, you ready?